A very good morning to everybody. It's Friday.
Woo! We made it. And we also had exciting news overnight. But first, what's with the posh looks box fresh?
It is a client lunch today. Because remembering I am a client. So Pete Ward is out on the floor watching. Just remember, speak nicely to clients, champion the client. Pete Ward's taking me to lunch and along with 11 others.
Nice. Where are you going?
So it's a big one. Somewhere in Knightsbridge. We can't give the location. Obviously, people will turn up and start shouting at me for telling them to short things.
Monkey Man will be there. Andrew McKilvey will be, asking about rocking up, asking about senior. Yeah.
So that is that's about 12 o'clock today.
Nice.
But we've got a lot of interesting stuff. But I do just have to say, first of all, to my goddaughter over in Australia, happy birthday, Holly Hankel.
Hey, happy birthday.
18th of July, and I know sometimes I can be a rubbish godfather, but not to Holly. Holly is my favourite. Don't tell everyone else.
Oh, happy birthday.
Right, we have got some really interesting stuff.
Oh my goodness.
Shall we have a look at what's coming up?
Yeah, let's do that. So today we've got the remix of myself and Rich McDonald. We'll take you, the remix, overnight action, everything that you need to know at the opening bell, and also fast markets. We'll take you through Burberry, tons of other news that is in play as well. And don't forget, before that, downgrades, upgrades, we'll cover those here for you. Then Joachim Clement is going to join us. Joachim going to be talking all things Burberry, Costain, and also he loves senior Andrew McKilvey, so I've already reached out to him on that.
I think he's got the best sense of humour of all our guests. He is an absolute...
quite dark humour.
Yeah, that's why we love it. Elliot Harris joins me at 9 a.m. I have already put a message into Elliot and saying, look, we're at all-time highs here, right? We know I'm getting hurt on my short call positions, but is there a trade, Elliot, that's a very smart one when vol has dropped as much as it has, when markets are high? Is there like a 3-month trade that we can put on that would be a crash protection, portfolio protection?
Hedge.
A hedge, because everybody has done so well. What can they buy now for really cheap that will make them 5x, 7x, 10x if we had a 10% move lower? So we're going to look at that at 9 a.m.
Nice. And we end the week with the number of the week with Chris Beecham and his bookshelf. And if you can get that right, I will send you a prize. Gavin Ackers and Steve, one of you got the prize, but there was no stamp on it. That was not me. I put the stuff on the reception, but I'd owe you £5. That wasn't me. The week ahead, we will be joined by Isar to tell us what is going to rock and move markets next week, and what is the most tradable event in the coming week.
Just expand on that story a little bit, please, Ange.
So our lovely people on reception, Denise, and also there's also Steph. They are, really hardcore IG people. But recently they've been very busy. Lots of people have been on holiday. Lots of people have been away. And so I bring over your address, and they're sworn to secrecy, right? They're sworn to secrecy. And they get a Post-it note. And I put the gift there, and you have to send this to this person straight away. So they do it, and they've never failed, except I think they're so overwhelmed with work at the moment. Don't forget, they also have to send out the welcome pack.
I'm hearing a lot of excuses, but you putting a job onto somebody else to send the prize out. You should have been down to the post office, putting the stamp on yourself.
No, I was at the post office, but they said the stamps now live with the people at reception because they're one of the same.
All in all, Gavin Asher's got a prize through the post and had to pay postage himself for it.
Sorry, I think it was £5. Was it Gracie? One of you. I owe you £5.
Yeah. Good morning to you all. On the chat, Gavin Ackers is in the house. Andrew McKelvey is. Andrew, we want to hear what your thoughts on Burberry are. We're going to come on to that shortly. Shilling Warwickshire. Now, that is a name, isn't it?
That is a name.
Avi Fine is in the house. Steve Davies away from the numbers. Neil, good morning. Jugger and Friar Tuck. But there is a name that I see on there, particularly close to my heart, Poppy. So we recorded our second podcast yesterday afternoon, and my gosh, did we push the podcast studio to the limits. We had to be out at 4 p.m. and we were still talking at 3:57.
Did they turn up the lights on you?
They certainly turned off the aircon.
You know, the goodbye music.
If you see, the chaps made the mistake of wearing blue shirts.
Oh.
They turn off the aircon because it interrupts with the microphones. But then they also have these big lights like we do in the studio here.
Which are hot.
So it is absolutely boiling. So anyway, we spoke a lot, and my goodness, what an incredible episode. If you are interested in how to construct a portfolio, we talk a lot about risk and how to think about risk. And also, we did a deep dive into equities with, Mark, who has been at the height of European fund management for 40 years, UK and Europe. So, yeah, that one's going to be out this evening. The Art of Investing.
Are we going to get their portfolio shared on Discord as well? Because I think there's a rebel competition going on. Yeah, Discord challenge.
I am, and I can't wait. Poppy, what do you think? Are they going to have a chance of beating you? See if the smart comments come in then. Right, let's dip into overnight action. We've got a lot to get through. So with all-time highs yet again, let's look at the economic calendar for today. Relatively quiet. We've got building permits expected at 1:30. Housing starts. Nothing major that's going to move. But it is Sunday. You have to look to in Japan, because we have a bit of a referendum going on the Prime Minister. So watch out for those results on Sunday.
Now, the other key thing as well is we have had so much in the way of results out from Netflix overnight. Were you watching that yesterday after the close? Because I was. It was like really, really exciting.
Watching Netflix or watching the results?
Well, the results rather. I can't watch Netflix because I don't have the subscription anymore. But
what's that?
Because they raised my price. I was a late adopter. And I thought I was getting a good deal because I'd never had a Netflix subscription. So I signed on for $9.99. And then it swiftly went to $12.99. And I know it's not a
You've cancelled it.
I haven't, and now I'm stuck because the big thing, other than the earnings, is, I'm sure you've seen it. I'm sure unless you're living under a rock, you may not have seen this. But they're starting to put out all these posters of Stranger Things 5. Have you seen that being advertised?
No.
Producer Phil's kind of like, bloody hell, I've lost interest, he said this morning, because it's taken them long enough to try and get Stranger Things 5 out. I'm going to pop this on my screen, FNF11 here, and apparently the trailer is going to suggest how Vecna is going to return. Trader friends, are you a Stranger Things fan out there? Please let us know. I know Maturin is
Is this why the stock's dropped after hours?
Well, the stock did move a bit higher, then it dropped, you're right, suggesting maybe that the expectations were baked in, right?
Funny that at all-time highs, isn't it? On a 40 times earnings, maybe it's priced for perfection. So they did beat numbers. They had a beat on the top and bottom line. The subscription and advertising growth helped that, as did the new content that Anja is talking about. However, the weaker dollar was pretty much the reason for them being able to raise revenue guidance. So that weaker dollar, yes, it's going to be a theme throughout all of these US earnings. But the market's meant to see through that, right? Especially on 40 times earnings. There was also a warning that the operating margin was going to fall as they had to write down the value of some content.
That's right. They warned it was going to compress, was the suggestion, in the second half due to lots more marketing spend and higher content costs. So if you want to whack up my screen, producer Phil, I've made a graphic there so that we can look at this on one page.
Fantastic.
Also, the slowing subscriber growth. That was one thing I was watching out for. You know, how much growth, because we know they've been adding like crazy, but is the growth slowing down? The suggestion is that it is. And that, you know, remember when they cracked down on passwords? So Aaron's, you know, ex-girlfriend couldn't, you know, they couldn't share their password anymore amongst his family, and suddenly they couldn't use Netflix because...
As everybody around the world. And that's why the stock is up 300% since they did it.
Yeah, but the benefits of that crackdown now easing, Rich, now easing. And the other thing that I watched out for too, if you saw my short previewing the Netflix results, and Rich did one on the markets as well, is that I was watching out for what it was going to say about, you know, the live sport offering.
Oh yeah, and the WWE wrestling.
Yeah.
I think it's WWE now.
WWE. Yeah. Well, they're trying to. What does the E stand for now? WWF. Is it E? Yeah, I think it's F, but they changed it to E, entertainment. That's right. And loads of competition coming in the streaming space, right? Disney Plus, and also a lot of entrants in emerging markets like India, really cutting into their market share.
So all in all, the market tried to spike. We saw about, remember it had gone up 1.9% during the day, and it tried to go a further 3%, but straight back down. So we'll see when the all sessions open, but it is down around about 1.8%. So giving back what it had gained during market hours yesterday. One to watch. But those of you who sell vol on earnings, then you will be a winner, because certainly was expected more than a 2% move. So, right. Do you know what's on the same price to earnings as Netflix?
Oh, is it in luxury?
You are wearing it.
But remember, you teased me. I was Burberry and for a long while.
I think that looks like Burberry, definitely.
It's a knockoff. It's a knockoff. I love spending on experiences, and I hold luxury stocks, but I don't spend on luxury because it just doesn't make sense for me. I mean, I don't buy luxury items. So
well, when it looks as good as that does, then you take the knockoff.
I have a hack. You know, go to the places where they produce all this stuff for Burberry anyway, and you're going to get a pretty good copy. But, you know, from a different brand, not, you know, not like a Burberry with one less R.
Pre-marché. Right, let's have a look at the results then. So this thing is on the same price to earnings. That is right, 40 times earnings for Burberry. And what do you do when you're on 40 times earnings? Well, you don't expect a 1% drop in sales. I don't think those two really compare, but it is in recovery phase. So comparable sales, smaller than expected drop of 1% in early signs of a recovery, very early signs of a recovery. And of course, the new CEO has been there for around a year now. And we're getting away. The good thing is they're getting away from the profit warnings and having dropped to £7 at one point, I think.
Yeah, it was harsh.
Now seeing them up at about 12.40, I think they were.
So I got out in October after I couldn't stand you ribbing me and calling me Burberry and, or was it Frank that was calling me Burberry and the next day went out with Tom Roberts' clients who were big on Burberry. They were listening to the show going, you know, why did you come out? Why did you come out? Because we had China Tuesday. Yeah. Right? And then after China Tuesday's effects wore off, it went back down again. I was like, yeah, I don't feel so bad right now. But yeah, I mean, I am not a fan of Burberry. It is at the extreme lower end of the luxury scale. And also the weakness.
Extreme lower end, that's a bit harsh. It's where my dinner jacket's from.
if anyone covers luxury as a luxury analyst, Burberry is kind of like, you know, considered up and coming. Not to say your Burberry jacket's not nice, but you know, as a luxury analyst, that's where they frame it. Hermes is at the top end, right?
Right. Yeah.
Asia Pacific, it's still down there, 16%. We're seeing a lot of regional weakness. Americas, we know, is a very big region for Burberry, still down 9%. All regions for their products showing negative performance. You haven't been buying enough stuff at the airports, Rich.
The argument from them was that sales improved sequentially throughout the quarter. Will they be good? Let's see if they are good enough when we get the opening indications through. But if we have a look at the chart, it's at a very interesting level. Look at that. That is a big W for Win. And Win is what you have done if you own these in the £6 or £7. As recently as April. April, along with everything else, of course, these things, it's £7 and it's been one-way market since.
And speaking of one-way market since, I mean, you know, yesterday, that's another, epitomizes, you know, the sort of headspace that markets are in, right? US stocks still at fresh highs. We're seeing, you know, strong retail sales, strong numbers, although we are starting to see mixed US data. Be interesting when Joachim comes on, because the last time he was on, he was saying 10% correction, remember? For US stocks.
He wasn't saying immediate.
Not immediate.
So I would imagine it will be the same kind of message.
Yeah. I think he was saying next 3-4 months.
Yeah. Into the usual August, September, October. That is your worry zone. Poppy chiming in. I had to give them a yellow card each for being too bullish yesterday. These two. Now, Poppy, that's even worse because Poppy's a value investor. And we are,
So that's right, Poppy, climbing the wall of worry. Yeah.
It does remind me on a bit of research I saw this morning saying that the short squeeze impact is fading. The S&P 500 upside is limited. This is from research out this morning. The short squeeze continues as consensus short baskets hit a new high at 67% versus April the 8th, but with a fading impact to the S&P 500. That's right, they are up 67% since the lows. However, the buying is drying up, and you've got the extreme weight of the Mag 7, as well as a significant drop in retail market making AI flow and Robinhood market share. After 18 months of that chase for AI, this should see limited S&P upside from here, considering the short squeeze has now faded. Is the short squeeze the last part of that rally? Well, only time will tell.
Only time will tell. I can hear producer Phil cheering there. You still got 30% sitting on the sidelines in cash?
Waiting for a home, and it did not go into SWC last night. SWC doing
returns.
Their my beautiful 4.25% that you get in IG ISAs. The cash returns.
The cash returns. Aussie accent. However,
well, and just let's cover Smarter Web. So Smarter Web did a raising last night, but it is for 17.5 million. Remember, they've gone from memory about 32 million, and then 41 million. Only raised 17.5. He went in for 15. And he got 17.5. I'm not sure how stock will take that today. It was at the price of 295. It has had a decent rally from the lows just 2 days ago. We'll have a quick look at the short-term chart. But you could, oh, sorry, that's a 3 minute. Let's go for the 1 hour. You could ask, why was it only 17.5? Which would be a fair question. So let's see how the stock reacts this morning. It does, of course, add, I think, about 6 million new shares to the share count. It gives them that cash to buy Bitcoin. But
Yeah.
you'd want to see it in the 30s, I think,
Yeah.
for the share to go higher. So let's see how that.
Having said that, I know quite a few people were still sitting happy with where it is right now. Not naming names here.
Yeah, but long term,
Yeah.
absolutely. But the whole model is that he can raise money to buy Bitcoin, and then Bitcoin goes up in the future.
Yeah.
They're meant to raise money.
Yeah. Yeah.
And that's dropped from 41 million down to 17.5. So
For those of you wanting to know more about this, tune into our playlist where you'll find Rich and his stackable boxes. Never will I look at a plastic box the same way ever again after getting to know Rich, because he's all about stackable boxes.
See, this is it. Netflix is writing down their value of their content. I don't think there's even any value on our content. We might have to have a word with the CFO.
I know, and we have to have a word, and also with the CFO and LSE as well.
What if we get a new bell?
Yeah, we need a new bell. We need a new bell.
I think we might have to do a GoFundMe for a new bell.
I want one with fireworks, please. Away from numbers. Neil, how are you? Rich, Angeline, I've got a SIP looking for a new home, but IG SIP offering not looking attractive to me.
Well, if you are, thinking about where should that SIP go, where should the ISA go, it is worth tuning in to our podcast tonight because, as I say, we talk about that portfolio, look at the early stages of how to construct a portfolio. So, yeah.
What time is it hitting the wire? What time is it being published?
We don't know the exact time yet because they have to do a bit of editing where take out my ums and my ahs.
Spoke a bit too long.
Yeah, literally, right? We've got 57 minutes of footage that is meant to be 40. So that is, that's quite a chop.
Right. Are we going to go to guess the chart, or are we going to talk about, what could move at 8? Oh, yeah. We've got...
we'll go to the charts now, but then we're going to look at Reckitt's because, do you remember Sillet Bang?
I love Sillet Bang.
It's gone.
No.
Sold it this morning.
Oh.
Sillet Bang and also Airwick. So this will be an interesting divestment.
Is this the essential home divestment? Is that...
That's exactly it.
Yeah.
So enterprise value of up to 4.8 billion. Reckitt's retaining a 30% stake. But, considering you're going to get 2.2 billion back in a special divvy, be interesting.
I like Reckitt. It's a really good defensive one. But now that you said it's sold Sillet Bang, so...
No, it's Sillet Bang.
Sillet is great until you put it on your chrome and your Hans grower and you forget to clean it off. And then it takes off the chrome.
Does it really?
Yeah. That's why it's so good. It's a good product, but it does actually ruin, if you forget to wipe it off and clean it off, it does totally ruin it. So just so you know. Right, we're going to guess the chart next. For those of you, it's a UK stock. Any other hints, Producer Phil?
Who got it yesterday? No, it wasn't. I know I didn't.
Who was it? It was someone new yesterday that got it. No. Two phones.
Oh, two phones got it yesterday. I missed that.
Yeah.
Two phones, falling asleep at the time because they're over in the US, aren't they? Let's see who it's going to be this morning. Are we ready? I reckon I've got this.
Drum roll. Let's go. Hey, trader friends, welcome back to Opening Bell with us. My goodness, lots and lots of guesses coming through thick and fast. Some saying Babcock, some saying Persimmon, and it looks like the winner is Amish. Yay! Rich didn't even get it, Amish, so you should be pretty pleased.
Didn't get it, and it annoys me when I'm close, and then producer Phil goes, "Oh, Hamish has got it. It's Sage." I'm like, I was still guessing.
Yeah, he then stormed off and said, I'm going to get a coffee. Liz, this morning we are 2 minutes from the open and we already have some early calls. Glaxo looking like it could be down 1%. FDA voted against proposed dosage of its Blenrep combis. Reckitt indicated up 2% after it let go of Silly Bang.
Nice. There you go.
Yeah, essential home for enterprise value of $4.8 billion there. Was that you, Phil, that went ding in there? Oh, it says glass. We got also in the UK 250, Burberry looking higher, indicated higher by 3%. Trench coat lovers out there, this might pay off for you after its numbers. And Senior, Andrew McKilvey, I know you like Senior, was we are seeing indicated 2% higher after the sale of its aerostructures business for £200 million in the share buyback.
Now, just Saul Rodriguez, thank you very much for writing in. But you might not even hear this because you're saying there's no sound on the YouTube. So let's just check in case, because he is in the US, maybe it might be on the Tasty stream or something like that. But for the rest of you that have got sound, we are looking at 7:59. Maybe if we can put in the taste, maybe we can put in the comment section of the Tasty, we give him our UK YouTube, then Sal can then log in.
Yeah, Phil's on it.
And we'll get another subscriber.
Yeah, hit the like and subscribe button if you love all these early indications, because don't be a freeloader. We know there are like half of you out there that are silent listeners. Don't be shy. Also come in on the chat.
Burberry up 2% and some calling Glaxo down 3%.
Wow. Way, here we are. Right.
BP at £4. BP, British Petroleum, the mighty. It has been climbing so slowly back up to that level, but it has finally got there. Well done, BP, on making it back.
Senior, not yet uncrossed there. Producer Phil, can you keep an eye on Senior for us? Is that a dig at me, or? Right, we got Lloyd's also trying to break out there, 78.5. We got the Pru up, we got the home builders. Yeah, it's looking like a decent morning. Yeah. At last, my Bats short had a down day yesterday, so that is nice to see that one back. The only reason I'm short of it is because it's a defensive, right? And we're meant to be buying everything cyclical and tech-related, mining, inflation trade. I do not know why British American Tobacco is so strong in the past couple of weeks, but so I asked Matt Arbour about this, and he has a theory that the sin stocks are back in vogue because he thinks, everyone's put money elsewhere, so now, why not sin stocks? So
yeah, maybe. Burberry, is that included as a sin stock? Because the stock is 3% higher at £12.84. That's a potential breakout of that W range as well. Antofagasta having a strong morning, as is Glencore, although not as high as it has been earlier in the week, 307. I know there were some sellers at 316. Let's see if it gets back there today.
Trader friends, watching out for GlaxoSmithKline for you, and that has not yet uncrossed yet.
Really?
Yeah, unless it's moved on unless you've got special premium client privileges. Let's have a look elsewhere. Bridgepoint. Let's see. Bridgepoint is another one that had numbers out, but I don't think it will move.
Rio Tinto that we got into yesterday, that is looking up 1.1. That's despite no move in iron ore. So I might just take half of that long yesterday. Might just take it because it could have just been marked up on that move. So yeah.
Do you have a rich rule? Is it like, you know, half when you think you ought to sort of, you know, start covering your back, or is there like a certain percentage?
No, it's just that I feel on a strong morning for the FTSE that the whole mining sector has been bought as a basket, which has put the likes of Antofagasta stronger, and has put the whole, and Rios doesn't really have a positive story this morning. So
there's no,
it's up 1% and it could easily drift back.
Yeah, so take it off just to be safe.
Well, take half.
Half off, yeah. So Bridge Point Group, you heard me talk about this earlier. It had its H1 first half numbers out, but the key thing here is that it's not so much the total AUM number that you should be looking out for, it's the fact that it reaffirmed, stuck to its 4-year guidance. So Bridgepoint up more than 2% there.
Right, on the downside in the FTSE, we've got Barclays. Barclays down 90 basis points, don't know. Rolls-Royce got to that £10 level, didn't it? Bit of chatter going on there in the Discord I hear, as Kate Murphy still got her Rolls-Royce.
Murphy, where are you? We're a bit worried. She hasn't come on the chat the last few sessions.
Probably spending all her winnings from... she'd been trading SWC well as well.
Maybe she's on the boat, you know, on one of the boats.
But yeah, NatWest, HSBC and Barclays, so UK banks all lower this morning, underperforming the FTSE as they all come in for the stocks with the stories. Reckitt's with their sale of...
Citibank!
And you're getting on my air wick for that. Burberry up 3%.
Can I tell you
numbers.
The happiest person amongst our trader friends today? Who do you think is the happiest person today?
Me.
You and?
Who else?
Poppy looked pretty jolly yesterday. Poppy, I've got you. I saw the bit where, you know, I think Rich is going to cut out a social on that when he talked about your memory versus...
God, don't give away the punchline.
For those of you who want to know, look at the podcast, and there might be a trailer coming out just like Stranger Things 5. But Metals One, Mo, Pelican, who called this one. Metals One is up, and roofing, it's up now more than 7%. It was up more than 6% earlier, but it continues to ride higher. Showing you the 5-minute chart there. Take a look at that.
Nice.
Yeah, Metals One completing the acquisition of an initial 10% interest in Novacore Exploration uranium project.
Right, we've got, it's not old news, but Senior PLC is up 12%.
Oof.
And what was that on the back of, Ange?
The share buyback of £14 million, and also the sale of its aerostructures business for $200 million. Andrew McKelvey.
A proper breakout.
Yeah, Andrew McKelvey calling this one because you know, Senior is one I know that he watches. Look at that. I mean, very nice there.
That's incredible. Never heard of it.
Joachim will be coming online to talk about that because he is a big fan of Senior. He'll also put your questions here for him. He'll be talking about Burberry, Costain, and also he is going to talk about Euronext.
But look at what recovery EasyJet had yesterday. Remember, it was down at 485. Well, EasyJet recovered back above £5 now. So a 3% rally off the lows on yesterday's number. We questioned, is it time for a long EasyJet, short Ryanair? Ryanair, of course, huge outperformer. And was EasyJet really as bad as we thought yesterday? B&M, we've been watching all week.
B&M is a really strange one. I think, who trades this?
What are you, an owl?
I just, you know.
Right, you see B&M there from the lows of 222. We know that Andrew McKelvey was in there
Andrew, so
taking all the bargain discounts. And now, yeah, rallying up this morning up to 235. So that's been a nice trade on the week for him there.
Yeah. Who was it? Luke Moore said that V&M for him was a, an indicator of economic anxiety and hardship indicator.
Now, how is SWC? Well, it's a widespread at the moment. £283. So nothing to go on there yet this morning. And then Valterra. We were talking about Valterra with our good friend Garth yesterday. That was a great segment with Garth. And they've had numbers this morning and looking good.
Valterra, they had their earnings. How is it doing right now?
Yeah, up 4%.
Wow, I guess the investors and traders holding on to the fact that it's saying it's still going to stick to its guns and going to deliver on its MNC production within its guidance, albeit at the lower end. So they seem to be taking, a sigh of relief rather from that for Valterra. Yeah. BHP. Have we looked at BHP yet? Up 1.6%.
I think in line with the sector though. Let's have a look at all those miners before we go into Europe. So here they are. Look at that sector. There is your inflation trade back on. Copper up 80 basis points to $5.55. The two trading in tandem really. London back above 9,700. Then you've got, all much of a muchness, as I say, trading as a group there. The big five, Anglos, Antos, Glencore, Rios, BHP. And then some of the smaller ones, such as Valterra, having a decent day.
What's not having a decent or sweet day?
Go on.
You like your chocolate, Rich?
Yes.
Yeah, you like your chocolate and you like your candy as well. This man buys a lot of candy. He then leaves it in the studio and around, and guess who eats it?
Generosity.
I then eat it and it's just absolutely like I now have to go on a diet or go to the gym or something, but he just leaves it everywhere, even around the studio. We're gonna have rats soon. London cocoa. Trader friends, if you were watching the chat yesterday at around this time yesterday morning, I was telling you if you're looking for something that is not looking too sweet, not looking hot amid a hot market, it is London cocoa, down more than 7% there. It had really weak data coming in. And let me just read it out to you because this is really a continuation of yesterday. Cocoa hitting an 8-month low. And it's because producer Phil's trying to think of a pun out loud, but he's in my ear. It showed that Europe's second quarter cocoa grind, which is a huge indicator of demand, trader friends. If you watch the soft commodities space, fell more than 7% from a year earlier to its lowest level since the COVID pandemic.
Imagine that, a bubble bursting and coming back. Let's have a look at that on the 8-month or 10-month chart.
Let's have a look.
How does that one look? Because of course this was the
since
big
COVID.
no-brainer that everybody was involved in, wasn't it? Look at that. There is the S&P 500 in 3 months' time.
Ooh, look at that. Can you tell he's trying to push his rich end of the year trade? Yeah, I mean, it could do no wrong, right? I mean, cocoa, even like, last year was one of the top performers, but look at it now.
What about coffee? Did coffee come back as well, or is that still going?
Let's see, Arabica. Here we are. Yeah, here we are. And the key point, trader friends, if you are touching the soft commod space, I always point this out. In fact, Scotty Byrne was here as well, and you both talked about this. Make sure you have your gloves on when soft commodities fall, because it takes the stairs up, but it takes a lift down. As you can see here, look at those amazing red candles. Once it breaks lower, it really does, skid. It just goes.
What was the level when your technical expertise would have said this is going lower? Which one of those candles on the right-hand side would you have been?
So
selling?
Arabica specifically, it really.
No, I mean, it doesn't matter what the thing is, right? You technical.
Yeah, but this is a technical. So the pattern I'm looking for specifically for Arabica is the, the 3 red candles. And as you can see here, I look for even 4. So this is a daily chart there. If we see 4 or 5 candles, it means it's going to streak lower. Can you see 1, 2, 3, 4? 1, 2, 3, 1, 2, 3, 4. And if it's broken very, very hard, like 3 days of closing lower, big fat candles with very short wicks, that means the sellers are now truly in control.
Yeah, but that's changed as of 5-6 days ago.
Well, I think Arabica could potentially go lower if it doesn't break above the level seen. I always go to the left of the chart, right? Scotty also talks about this. If it doesn't break and close above the level seen in December 2024, I kind of like later but safer. You might be more risky rich.
Not me. I was in bed by 10 p.m. last night.
Well, I was in bed earlier. Producer Phil and Terence were out clubbing. But safer but later.
You start talking about Terence and the name straps come up.
I know, right? But safer but later for me, if it's going to continue moving up, I want to see 3 to 4 daily closes higher before I get back in.
Okay. Right, a very quick look at Europe then. Let's see Gucci at the top of the pile, benefiting off the back of Burberry. Because if you're buying Burberry, obviously, you're going to buy Gucci as well.
Is that a Gucci belt there?
Havas, no, this is probably from B&M. Havas is up 1. I just saw it had a notification come through that Vivendi was having a strong morning, so we'll look at that in a second. But yeah, Total, the French oil name, up 70 basis points. Puma. Now Puma have just signed Man City deal.
Oh, I didn't know. I missed this.
I think it's €1 billion
Oh.
euros or €1 billion sterling that they've had to pay for it to sponsor a football team. Is that right?
Didn't you hear we're sponsoring rugby next? Please hit the like and subscribe button, people, Trader friends, because we bring you all the juicy stuff that you don't normally get here, and also because we are in conversation with you all day. You get it in real time, which you don't get anywhere else but here with Rich and myself.
I think CNBC have been watching us in the morning.
You said that. You said that.
About 7:05 this morning, they started talking about Burberry, and Sedgwick got very animated, and he said, "Are we actually having a laugh on this one?" So I mean, CNBC, I didn't think they could give opinions, but you know, to say 40 times earnings and their sales are down 1%, are we having a laugh on this one? So this is good.
But
CNBC moving towards our content.
Yeah, they must be copying us, Rich. Just like they did when they started off, they looked a bit uncomfortable, didn't they?
Yeah.
Yeah. But because we have you guys, our trader friends here, and you're so engaged, thank you very much. Yeah, it makes our lives, Rich and myself, so easy. RSAC sent an email the other day and said, you know, I hope you don't mind, and that we ask so many questions. No, we love that. Ask more questions. It makes it easier for us, Rich and I, to give you content that you love. That is good for everyone.
And that is including 71 members on the Discord group now.
Amazing. Shout out to Maturin there.
Good effort. If you want to join the Discord group as well, that is, of course, the Discord group of the viewers.
Yeah.
Maturin be doing fantastic work to set it up. If you want to join, what should they do? Producer Phil, add Maturin.
Yeah.
And Phil's going to put the Discord name on the group, but also Maturin's put it there. If you'd like to join in, drop a friend request on Discord to MATU03. That's MATU03.
Yeah, Maturin's also collecting my royalties for Trader Friends. The name Trader Friends. Atom now up 9%. Right, we gotta go before Phil comes in with a crook and drags us out. But just a few things we didn't get through. Barclays also cut to neutral this morning. Standard Chartered cut to hold at Shore Capital as well.
I'm not sure why they're so keen to go to a break, because we're just coming back to do fast markets anyway.
I know.
That's what we're doing. Right, let's go. Scene 2.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Right, so let us know what you would like to look at. We've done quite a lot of it already this morning, but we're going to take a look at my tasty portfolio and see what is in there. So we've talked about Apple. That one hasn't really been making any headway. Considering all-time highs, it's gone from 209 to 210. So Apple doing nothing. Google, however, has had a bit of a march up. So that is now sitting right on my call level. So I'm pretty happy about that one and feel that that will continually take that step higher towards the 190 level. Not sure if we get much higher than that. Intel hasn't had a great week. Maybe that's why Piers dropped out of the show yesterday when he was meant to come in. But no, Piers' daughter, he had to look after. Big shout out. A lot of love to Lotus there.
I hope she's okay. She all right? Yeah. Okay.
But yeah, Intel not having a great week, not taking part in that rally. That was because of ASML, as was Marvel. Marvel dropped down to $68 at one point. I managed to pick up some in my IG account at 70.50, I think.
Nice. Was this after Mo talked about it? Pelican. He's always talking about Marvel.
Oh, really?
He's a big fan.
No. Is that a joke?
No, I'm not. It's
Are you
not a
talking
joke.
about Marvel or Marvel?
Marvel. Oh, it's different. Marvel.
This
He's
is
a
the
big fan.
tech company.
Yes. Talk to me about it for
comics.
so long. It was like, oh my goodness me.
So anyway, but now it's back to 72. So yeah, I'm not sure. Remember, I have got Google, Intel, and Marvell Technologies because I am Goliath short Nvidia and Palantir here. Those are obviously hurting. Nvidia, I'm short a lot at the 170 level, and that is short calls. But look at how they're priced. This August one is priced at $880, so my break even there $178 as it is priced just now. And This October one's priced at 16, so that's for it to go up to 186. So I'm pretty happy with those. I'd even add to them here because I think Nvidia is very toppy, to say the least. Palantir is more than toppy, in my humble opinion, but I am short the 160 call, so I've got a little bit of room there, but they're priced at $9, so a 170 break even for August. Again, I think I would add to it. Starbucks, we just got a little bit of downside there. S&P, I now have a very simple 620, 605, but that runs out today, so that is done. Got to take that off this afternoon before the close. Remember, with your tasty positions, always take them off before they expire. That is the
that is the mantra. Yeah, they almost never let it go, like the full run.
And then Tesla, that's creeping up there, 320. Put this on when it was about 295. Got the 380, 440, 1x2 for SEP. And then we've got this lottery ticket for the 500 to 800 by next June. But yeah, that's where we are just now. Nike not really doing anything. I've got, I'm short the 72.5 puts for today. So I'm hoping that Nike stays above 72.5 by the close today.
Just go back to your contracts for Nvidia and Palantir. So by the looks of that, you're kind of thinking we're going to see that market shock that Joachim's talking about.
No, that doesn't need a market shock. That needs them to stop going up, right? If they flatline here, then I am coining it in because I am also short the 135 puts, I'm short the 125 puts, and I'm short, well, I've got a bit of a July 165, 152 on, but it just needs to stop going up. And that's where I am with both Palantir and Nvidia. I think they've topped out. I think the market's topped out. If the market's going to continue going, it's going to be because of a widening of the breadth of the market. And that's when I see markets like the FTSE start to really ramp up. I see stocks like Intel start to go. I see Marvel start to go. And I see Google and Apple. So that's why I've got long structures in all of those against 2 trades in Nvidia and Palantir just for them to stop going up.
With Nvidia, you might want to look at some data showing increasing interest from the retail market.
Well, no shit, Sherlock.
Yeah, but even more.
It's the only 2 stocks that people buy.
Even more, than what we've seen before, because that could.
Yeah, but that doesn't move a needle on $4 trillion.
Well.
That's my whole thing about Nvidia at 173, 175, 180 is that the earnings movement, they cannot give you the earnings upside to warrant being more than 4.5 trillion of a market cap. It's not possible. They don't have the supply capabilities to make that much money. Never mind the potential competition that comes in. So the pie cannot get any bigger, and that's why I'm, so high conviction that 4.5 trillion is as high as this thing can go. In the short term, remember, options run out, right? So by September, that's fine. I can get 1 more quarter's earnings. I'm not saying that it doesn't go higher next year, but by that time, I don't care because I've taken the premium.
Cool. Speaking of fast, how fast are you at getting charts up? You ready? Are you ready? Fast finger, Rich here. So let's have a look at some of these stocks that have moved higher and we might have missed earlier on. Telenor, if you bring that up, Telenor is rising to a more than 5-year high. This is Trader Friends because of a Q2 beat, and also it is saying its outlook is looking even better here. Q2 adjusted EBITDA more than 9 billion Norwegian crowns. That is 908 million in terms of dollars for you.
Next one, go.
The next one is we are going to, and this is my wonderful machine that I've built here. Electrolux is the other one moving the other way. Electrolux call out. Here we are.
Oh, ouch.
Yeah. take a closer look at that, trader friends, because that is a big gap down there. And this is because it's saying that things are very dire in Europe for it, despite its earnings beat. Citi and Kepler also noting the weaker than expected performance in Europe.
And why are they getting frozen out of America now or something with the tariffs?
Well, they have said in the past that they are really worried about the tariffs, but for them, their big market is Europe.
I'm just here to entertain myself.
They didn't actually really talk about the tariffs because I think they've talked about it for so long now. But their biggest growth market is Europe, and it is saying now that the competition is crazy and it is not looking good for margins because all that's getting compressed, right, for its home appliance goods and stuff. And producer Phil is saying we have time to, we could wrap now.
To have a look at one more, did he say?
Yeah.
Right, UK markets. Let's get an update on those then with Ocado leading the board up 5% there. It's a good week actually. That's the old short squeeze is truly on in Ocado. Reckitt's gaining up 2%. BP's kicked on from that £4 level, now £4.04. And yes, the miners are still there. BHP's leading. Rio's, yeah, it's exactly where we were, up 1.1. Anglo's £22.15. It has dropped a bit back on the week. And then where's our rollers? Where's Rolls Royce?
You doing this for Kate Murphy?
The SSE holding £18.60 level.
Oh.
The mighty Vodafone 82.40 at the high end of that range. Diageo 19.20.
I was going to say finally moving.
Yeah, Diageo's.
My God, what a terrible stock. Oh my God.
Tesco top. We go into Tesco in some depth actually on the podcast, and it's remarkable to hear that their growth levels are only 3%, and the stock, you know, is up what 30% in the last year.
Well, it's a one that most people who have a UK type fund have in their portfolio, and it's like the AstraZenecas, right? It's like the Lloyds. You know, it's like a staple in those funds. You want to see a beautiful chart? One last beautiful chart.
Go on then.
Right, slam up my chart. So people, RSAX, this one is for you. Defense is looking like it's helping in terms of spending, helping this stock. It shot up 10%. It is now starting to turn. Andrew McKelvey always finds it really funny when I say it's starting to turn. He goes, well, how do you find this out? Like looking at the stock. But this move here higher is after the Swedish military equipment maker posted higher than expected Q2 earnings and also raised its sales forecast because of what we already know, which is increased defense spending.
Nice. Fantastic. Right, we go to the break and then, Salzgitter down 15%. What happened to their defense spending? Oh, we got to take it. Thank you, Ida Rock, for telling us about that. That is, look, it's right back down to where it was before it announced to everybody that its steel could be used in that German defense build. And it's, God, it's lost everything. What an absolute shocker.
External sales falling in Q2. So, yeah, they might, investors not liking this at all. No, Phil's not liking this, Phil.
Right, time for Joe.
All right, let's go. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away.
But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Hey trader friends, welcome back, and we are joined back by popular demand, Joachim
You mean 2 people actually wanted me back?
Actually, loads of people. In fact, we had another mate of mine, long time. I felt so old when I realized that. I'd known John Mayer from SP Angel for 2 decades, I think. And I think his response was, we were 4 back then, weren't we? Oh. So yeah, it's always great having you on. I see, you know, I love how you're consistent. It could be 35 Celsius, trader friends, and Joachim will still be in a suit.
Oh, absolutely. I mean, I am one of the few people who still wears ties into the office. As long as I'm in front of a camera, I will wear suit and tie, no matter what you do.
I love a bit of consistency. Speaking of consistency,
yes,
I know you and Rich are betting that the now slightly consistent grind up taco markets is going to have a correction. Are you reiterating what you said here the last time?
Absolutely. Nothing has changed over the last 2 weeks since I was here last time. In fact, there are some new signs of some exuberance in markets. I love to read Sentix, which is the German weekly sentiment survey that everybody can dial in for free.
Is that what you read before you go to bed at night?
No, but every Friday they send me an email to ask their views, and then on Monday they send me a nice little note of where things are. And just this Monday, in the latest note, they said that the setup in terms of investor optimism is such that they expect a massive increase in volatility in August. Now, what could possibly happen in August that creates an increase in volatility? Exactly. So I think 2 weeks ago I put my money on the trade war heating up. That promptly got delayed 3 days later. But as they say in Germany, aufgeschoben ist nicht aufgehoben. Just because it's delayed doesn't mean it's over. And I think we are going to go to crunch time when it comes to the tariffs. Whether that's late July, early August, as we now expect, or whether Trump is caving in once more, we don't know. But there's something important to realize. Everybody seems to be thinking about the taco trade, obviously, still, and that Trump will chicken out eventually. But the more resilient the stock market becomes and remains, the more it encourages Trump, because Trump has already been in front of cameras saying, oh, the market takes it in its stride, so they're not worried about tariffs anymore, so I can just go ahead.
And in fact, you know, the whole JP tremor that we saw recently, my humble opinion, please tell me, trader friends, if I'm wrong or not, Joachim never holds back.
We know each other for not quite 2 decades, but still.
You know, that was just him testing, just Trump testing the market, right?
Yeah.
Let's see what will happen if I wave this bit of paper around and I say that, you know, he's potentially going to see how the market reacts so that when the time comes, when it happens, they'll have a gauge of how the markets might react.
Yeah, and my money is still on Jay Powell remaining in office until May next year. So he will serve out his term. Well, just because there's not really a reason for him to resign. If he resigns before May, he himself will cause a market upset. And we already see that in the interest rate cuts priced into money market futures, that the market is already expecting Jay Powell to be replaced in May next year by somebody much more dovish, who will be much more likely to cut interest rates. Now, having said that, the chair of the FOMC is just one person. So it's not going to change the entire FOMC. But the signal to the market that the Fed has reduced independence is going to be catastrophic. On Monday, I sent out a note to clients when things were still kind of up in the air whether Trump would move forward, with a study that has been done in November 2024 by some academics of how would the market react if the Fed loses its independence. Now, nobody knows is the correct answer. But what they did is basically say, well, if the Fed loses its independence, they will let inflation run at 4% instead of 2%. And that, they expect, will devalue the dollar by about 15% and increases the risk premium on long-term treasury bonds by about 120 basis points, 1.2 percentage points. And I think that is entirely feasible in the long run. If it comes as a panic, then all bets are off. It might be much, much worse. But to be perfectly honest, in a world where the Fed is no longer independent or even perceived as independent, 5% is a floor for 10-year treasuries, not a ceiling.
Did the report say anything about how much lower the dollar might go? I'm just whacking up the dollar basket for you, trader friends.
As I said, they expect 15% on a trade-weighted basis. So that on a cable perspective, that might actually get you to 150 for sterling dollar.
It's interesting, isn't it? I mean, we've been seeing all these, what I would call usual suspects that would rock the market, but they haven't, which makes me feel vindicated that the markets have now become completely unhinged from the usual, geopolitics, bunker busters, tweets. Has completely gone cuckoo bananas and unhinged from the usual things that move the markets. And so far, since that April tariff tantrum moment, we have just seen a consistent bump the dip. What I am hearing now more, and I'm going to stretch out my trend line there because it has now started breaking below it, and for a technician that is interesting. We've been seeing buy the dip, avocado since April. When are we going to see buy the rip?
Oh, that's a good question. And as I said, I put my money on late July, early August as a trigger. The earnings season that has just started in the US is not going to give us any major surprises, except in maybe individual stocks. We've obviously early days, only 50 out of 500 companies in the S&P 500 have reported. But let me give you an interesting statistic.
Go on then.
50 stocks have reported. 8% is the average beat on the earnings side, so 8% positive surprise. Over the last 8 quarters, in 6 out of those 8 quarters, S&P 500 companies have on average beaten by 8%. No, really. It is one of the most rigged games in this industry. Corporate executives tell analysts the numbers that they should write in their reports, not in so many words, and then analysts make an assumption, and corporate executives beat by 5 to 10%, typically centering around 8%. Nothing is going to be a surprise in this earnings season. It is going to boil down to the macro environment, where we do see some first signs in US inflation picking up, where UK inflation came in hotter than expected, and where I think the leading indicators also point to a slowdown in earnings growth, at least in the US.
And just looking at the chat, lots of people chiming in. SG Callan saying Joachim is a star. You see, they're all listening. Talking of ties, Monkey Man saying,
I'll send you my money later.
is that a Paul Smith? Monkey Man is...
No, that tie is actually from a charity shop.
Oh,
I don't know what it is. No brand.
I love a charity shop because there's so many unloved items that can get, you know, more another lease of life. However, if my mum's watching the show, she'd be absolutely mortified because in Asia of her generation, it's still like the soul of whoever that person was that last wore it will remain
Yeah.
in the article of clothing. And then she'll go to the next question, which is, Angelina, you piss poor. Please tell me. Is the next. Yeah, let's not do that.
Well, let me put it this
Monkey
way.
Man, they used to have a Ferrari, by the way. Is it Ferrari? I think I got that right. Monkey Man was saying, talking about your ties. Back on track now, talking about from ties to Euronext. I'm looking at you to make that bridge.
Yes.
I've been picking Joachim's brains to talk about, you know, despite all this unhinging of the markets, despite the taco madness out there, where can we see pockets of light and opportunity? So let's talk about Euronext.
Euronext, definitely. If you have followed the financials and the bank's earnings in the US these couple of days, you will have seen that the trading revenues have gone up in general and have tended to surprise to the upside. Well, why? Because in the second quarter, we had April and May and all the chaos, and that volatility is obviously great for trading revenues. And so you want to invest in companies that are yet to report their numbers, and Euronext, together with London Stock Exchange Group, report on the 31st of July, and that benefit from that. Now, LSEG, we've talked about that before. I'm still a big fan of it, but LSEG is mostly an AI play, and LSEG Workspace as a competitor to the Bloomberg terminal. The London Stock Exchange is just 17% of revenues. Euronext, 75% of revenues come from primary and secondary market revenues in the stock exchanges there. And that, to me, is a clear-cut case for a positive surprise on the 31st of July because of the higher trading revenue, and because in Europe we're also starting to see a little bit more in terms of equity capital market activity and capital raising activity.
Right. The other interesting thing about this Euronext play is that you know, it seems to be more exposed to the revenue streams that are linked to technology solutions, data sales, managed services, and its key products as well. It's linked to a real growth area, especially in Europe, the ETF and structured product solutions too.
Yes, they are actually quite innovative when it comes to developing indices on thematic trends. So, for example, they have announced that they will provide an ESG index for defense stocks. They were the first ones worldwide in that. And it's this kind of dynamism that you see in Euronext that you don't really see in other stock exchanges that much.
Right, so let's try and have a look here at Euronext and its share price. Let's have a look. It has had a really good move high. This is the daily chart, and very strong upward trend there.
And you see it's at resistance.
Yes.
But as I said, I think we will see a little bit of a dip maybe in the next couple of days in order to kind of get a nice run up for the 31st of July, 1st of August, to break through that resistance.
Nice. So a bit of taking off the froth before it continues to move upwards. Nice. Also, in terms of a rating snapshot for you trader friends, we got outperform from 8 analysts, a hold from 7, and a sell from 3. This is the most recent snapshot from July this month. Now, another one that you like, big news today. I crunched some numbers as well for this. Do you own any Burberry?
Ties, yes.
I knew he was going to say yes. So he's got more. He's got Actually, that's not hard. I don't really own luxury goods. I don't own luxury stocks, but not goods. But yes, you seem to have quite a bit.
Because you're a weird woman.
I am not weird.
I'm sorry,
pragmatic.
I'm sorry, but you are
It's
a
hot
lady of
today.
Asian heritage. If you don't have any luxury clothing at home, then I am really surprised.
None. Absolutely zero. You can come and check. However, I do have two, well, until recently, I had two full-size functioning dishwashers until recently because it got pulled out by my husband because he said it was taking up too much room. I thought it was really practical. Trader friends,
A Jewish household.
taking a look at, but no, I don't like.
Just to have just two dishwashers, not two entire kitchens.
I like entertaining. I don't like washing up. Burberry. Enough about Angeline's household. Burberry.
Yes.
Right. Let's have a look at this because we did see it, move quite a bit. It moved a bit higher and then a bit lower. The key things here, which I pointed out this morning, very disappointing on the growth and the demand in Asia Pacific, and also the Americas as well.
You think so? I
Yeah.
would disagree.
Were you kind of like, yeah, this is a buying opportunity?
This is just a confirmation. I mean, the shares are up 27% year to date. It's the best performing luxury stock in Europe. And why? Because it's the stock that if you went into 2025 at the beginning of the year, everybody loved to hate it. It was the most despised stock in the
Including
luxury
me.
sector. And rightfully so. It was in deep trouble. And the new CEO, which came in about a year ago, has engaged in this turnaround program. And with the first quarter results, we saw some first signs that the turnaround is coming. Now, what we're seeing is on a global level, minus 1% year-on-year comparable store sales versus minus 3.7% expected. So a slight beat there. And across the regions, in the US and in Europe and in Asia, an improvement of the situation.
An
Yes,
improvement of a negative situation.
you know when you make the most money, when things go from very, very bad
Bad.
to just bad.
Yes, I know that. But my problem with Burberry is that it is at the lower end of the this is not to do with types, of the luxury spectrum.
Yeah.
And also we are seeing still, signs of consumption weakness, inflation is high. And so it's not really servicing the end of the market whereby, if times are bad, it doesn't really matter, right? And also the whole, coming back to, I'm going to get Burberry's share price up. Mm-hmm. Yes, it has done well, but my thing with Burberry is that, look, it's down 1/3% there. And I'm going to show you, trader friends, my daily chart there. Here we are. It has done well, but I am still not convinced that, demand is going to shine in the second half of this year. And I think a lot of that good news comes from extreme cost cutting. I mean, what is it? They've cut some 20%?
And at the same time, they said that now in 2025, their focus remains on investments and rebuilding the brands, rebuilding the supply chains, and focusing on their classic products like trench coats and scarves, etc. So simplifying their entire product offering.
Thank you. Pessa Mali is saying that. I believe Anne. She seems like a sensible.
Yeah, and you're both wrong, but fine.
Also, Jugger coming on saying, love Jugger, he's German, as you know, been on our chat for a very long time, saying it needs a German to teach someone to be British. Love your sense of humor. What I would say is, especially with Burberry as well, Hatter, Panzerkatte.
Yeah.
Is one of my favorite things. Like, oh, we could have done better and changed up our design team. Oh, we could have done better and found ahead sooner. I think all this has meant that it's going to actually either come down after it's, now being supported by the 20% workforce cut. And I think it's still going to be difficult in a world where there's going to be high inflation. People are not going to feel that especially on that end of the market, not so confident of buying, you know, that Burberry you pick up at the airport, right?
Actually, tourism revenues in Europe were disappointing. It's one of the disappointing things there. But domestic demand, so outside of airports and tourists hubs, was picking up strongly. And that's actually what we see in general. People love to hate European growth and European consumption, but we are seeing a lot of signs that Europe is accelerating. Economic growth in Europe is accelerating. And the company is very honest and saying, look, don't expect any positive kind of developments in terms of year-on-year growth on sales or earnings in 2025. It's all guided towards 2026. So they have bought themselves some time before they might disappoint. And then the other thing is, you know, we just got the biggest tax cut in history for middle class, well, not middle class, but wealthier American households. Yes, they're going to face tariffs, which is going to cut into their budget. But on the one hand, they have to spend more on imported goods, but on the other hand, they also spend less on taxes. So I'm not that worried about consumer demand in this kind of affordable luxury segment in the US or Europe. And everybody knows that Asia is in terrible trouble. So that, in that respect, nothing is new. Indeed, if you look at earnings revisions, luxury companies across the board have seen negative revisions. Burberry, no. Because everybody was so pessimistic already that it has found its trough, and we're now starting to see some earnings upgrades.
You know why I also am not so convinced that Burberry's, you know, going to do well in the next half year? I've not had, not one question or request from Asia to buy Burberry, to bring it back. I am the Burberry mule and the
So what are they asking for? Hermes?
They ask for Hermes, they ask for...
Well, Hermes is a perennial outperformer. It's just the best luxury stock in the world.
They ask for Vuitton, they ask... I know, right? It's crazy. And then I end up carrying this stuff that it's not even for me. Do you believe that Angeline doesn't own any luxury items? Oh, amazing, look at that! 51%!
I will come to your home and check your closet.
But cars don't count as luxury, okay? That's
no, cars is different. We're talking here about clothes, watches, scarves, coats, etc.
Look at what I'm wearing as a watch. It's all like pragmatic, you know.
Yeah, I know that you're very utilitarian when it comes to your tech gadgets. That I know, but we're talking here about clothes.
No clothes. This is like my shoes are M&S's best trainers right now. Grant, Terry, what's your thoughts on Estee Lauder as the world enters a recession later this year? That's a good one. Estee Lauder, very unloved for a very, very long time. This year could it be the lipstick effect be the factor in turning the bearish trend around? Grant, Tyree, have you had coffee? You're typing. Estee Lauder, thoughts?
Thoughts? I don't cover Estee Lauder. I don't follow Estee Lauder, but I do follow L'Oreal and basically similar stock. And I would say, well, there is some softness in macro data in Europe in the second half of this year, but we don't expect the US to go into recession this year. I'm in the camp where I expect the US to go into recession in 2026. As in reaction to tariffs and things like that. But yes, there definitely is a turnaround possible for these cosmetics giants. The lipstick effect is something that is kind of like reported time and time again when you go into recession, but it doesn't really hold up that well if you look at it historically. It is more a situation of, I would say, you know, things getting a little bit better in Europe and in the US, as we just said, what Donald Trump taketh on the left is giving back on the right in form of tax cuts. So yeah, I would say solid consumer demand should actually support these cosmetic stocks. Yeah.
Paul and Peter there. Grant, Tyree, thank you so much for your comments there. And good point, Estee Lauder. It looks like there is a bit of a breakout there after a lot of pain on the chart. since its highs, heady highs around December 2021. We will have a look at that. I know Piers was looking at SC, so I'll ask for you. Right, slam the like and subscribe button if you want Joachim back with his ties and his stock recommendations.
You can even send a request what brand of tie I should wear.
That is a whole entire show.
Oh my
yeah, another show. Thank you so much. We are going to have all sessions coming up next, and also don't forget Isar as well to take us through to the week ahead, and Chris Beecham for number of the week. So stay right there.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest, and it's days like this. We get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Welcome back, everybody. So we're going straight into all sessions. We've got Elliot Harris with us to run us through not only what is about to open and what we're seeing in the US, but then having a look at Tesla, Netflix, and maybe even some downside protection at these heady heights. Good morning, Elliot.
Good morning, Richard. Morning. Happy Friday.
Happy Friday. You use the Uber line bikes at all?
I've never been on a Boris bike or a line bike, which is probably quite rare for someone who works in London for over 20 years.
Driving around in that Porsche 911 everywhere.
Not quite, mate. Rely on the old legs.
Right, so Uber, talking of which, I mean, I'm on that line bike every single day, I think. That's up 50 basis points, just above $90. We've also got General Electric up another 1% after a move yesterday. And Nvidia just about to touch 174 on the downside. And actually, I should say Tesla as well. Tesla at 320 there, Elliot. Netflix is our stock of the day. That is down where it was on the close at 1 a.m. this morning at 12.51.
Yeah, that's wiped away the 2% gain that we saw after the decent earnings last night. So, as we were on that one.
It's almost as if stocks are priced for perfection, Elliot.
Efficient markets.
Efficient markets. Right, so that is your rundown. Let's have a quick look across at the my tier 2 stocks. Let's see what is moving there. Of course, Coinbase, Robinhood up strong, as is Plug Power. Plug back up to 167 there. Reminder, that's one of Piers's. And MicroStrategy, 454 dollars. We saw Palantir there somewhere. Where's it gone? I swear I saw Palantir up a percent.
I think it was on your previous one just before.
Yeah. Anyway, don't want to look at it anyway. It's costing me money. So Elliot, let's dive in then. So it was an interesting week with that Powell rumor on Wednesday.
Oh, it really was. Still, it's crazy how a tweet or was it even a story? Like, has he mentioned it in some form of meeting? Yes, he probably has. So
Yeah,
that then be elevated
yeah.
into exactly. So that's then be elevated into a huge story, and have the effect that it did was. It's really quite concerning that such a, all right, trivial is the wrong word, but there wasn't really any firmness in the rumor, if you like, and what.
I take the other side of that, I think.
Yeah, and a lot of people did, especially on our daily options. The market came off quite aggressively. Saw a lot of clients which stepped in and actually bought the money calls and said, "Okay, I'm just not believing this." And within an hour, yeah, we're sat on tidy profit. So,
any chance that Powell resigns in the next couple of weeks when he's actually getting elbowed in the background?
I think it'll take a lot more than that, yeah, to
think.
Yeah, a lot more than that.
$2.5 billion of nice staircases and paintings, not enough.
Goes a long way.
That sounds like the year kind of house renovation, that does, doesn't it?
Not quite, mate.
So we had, but it was an example of what can happen with all this. As I say, markets, I kind of joke price for perfection and everything, but with all the risks of inflation, with the risks of those bond yields back above 5%, with the risks of Powell doing a bit of a disappearing act, then it'll be interesting if anything does go wrong. What does vol look like?
Yeah, vol isn't as low as what we might have expected. Now, if you think that IV is basically the market's fear gauge, if you like, that's how nervous our market. So when markets are generally at lifetime highs, which is where we are basically on the S&P and the Nasdaq, you would expect vol to be lower than it currently is. So S&P vol on a 1 month, 2 month basis maybe goes just about sub 10%, I would say, as a floor. Now S&P vol on the 1 month, 2 month is around 13%. You've still got 3 or 4% to go in terms of vol. Yeah. So the market isn't being complacent. The market is still aware that, okay, it's not going to take a lot from Trump, and he's never been great at listening to the experts. Yep, he knows best as always. So the market's still nervous out there that he does something out of the box, if you like.
With good reason.
Absolutely.
You're not forgetting that we've got in 2 weeks' time, we've got this tariff deadline, and whether we'll stick to that. Yeah,
the market though, and investors, as they've almost become desensitized to all the latest tariff story, if you like. So I think he came out maybe yesterday, maybe Wednesday evening, and said that he's got 150 letters waiting to be sent out, saying 10 to 15%, slightly down from 15 to 20%. Yeah. The market's sort of turned a blind eye in terms of the overall push to fresh highs. So for me, equities, I still think the risk is definitely to the top side. However, I was having a look at a trade, and nothing out there looks overly cheap at the moment.
Chart off, guys.
And that kind of rolls back to the idea that I think vol's got a lot more room to go. I think vol will continue to come off. I've certainly been banging that drum over the last 2 or 3 weeks about how IV continues to soften, but it's got a lot further to go, I think.
And that is because we're going into July and August?
Yeah, you always get a bit of a summer lull, but more really just going back to market dynamics, really. For me, I still don't necessarily see where the bad news is coming from. I still think there's plenty of good news out there. There's still plenty of strength in the AI sector. I still think we're going to push higher. I was having a look at the skew, though, it's not as steep as it was, but it still remains fairly punchy. But having a look at, say, the top side, even if, say, having a look at September, 67 calls around there, if you want to get the chart up.
Which call, sorry, 67?
S&P, yeah, so, yep, S&P for September, 6,700 calls.
Okay. Yep.
You're looking at what, they're around 15 offered. Yeah, in fact, 19 at 20 and a half.
Yeah.
Yeah, I'm not in a rush to buy that, to be honest. So I think that's going to decay as vol comes off.
Okay.
Yeah, so I'd give me a price around 10 or 12. I'm possibly interested, but you've got 2 months to go for another best part of 400 points.
Okay,
yeah,
so
I'm not in a rush to buy that.
Let's, you know, I don't want to hear this bullish rubbish from you, Elliot. I want to know downside. Give me some downside protection if I've made bundles. I had a girl in New Zealand that I took for a beginner's class, right? She didn't know what a stock was, what an equity was in 2020. And year to date, she's up 17% on her life savings. She's doing fantastic. Somebody like that, they want to protect that up 17%. What do they do?
Well, sticking with September, because I think that everything else will maybe come slightly too soon. Obviously had a bit of noise in terms of the dot plot, in terms of the Fed rates. Waller saying that he thinks that there should be a July cut, which I think would come as an almighty shock to the market. Currently implying less than a 5% chance of that.
Yeah.
September's still on the table. September's probably implying around 62% chance of a cut. Now, I think we're going to have a fair bit of noise between now and September. You've also got Trump that's banging his drum that rates should be down at 1%, which is fairly crazy and isn't going to happen. Certainly whilst Powell's in charge. For me, even if, say, you look around 5,600 around there, even what, the 55 put, you're paying over 20 ticks for a 55 put, and that's what, a 13% move in the next 2 months? I just can't see it. So for me, I'd probably be...
But this is the exact trade I'm talking about. Things that you cannot see. Things that you don't even... You know, April 2nd came out of nowhere. Nobody said, Rich, it's going to trade 4,900.
Absolutely, but you're not the only one who's got this idea. So that skew is pretty punchy still. What, you're paying 25% vol on that? If you could buy it sub 20%, I might be a buyer, but for me, it just still feels slightly rich.
So what about a put spread?
I would be selling a put spread. Yeah, but I would be selling it as a credit spread. I'd be probably selling this 5,500 put, say 21, and buying for protection something like the 5,000 put for 10 maybe. And receiving 11 ticks.
And so what would happen then if we got a sort of 10% sell-off?
Yeah, if you get 10% sell-off, the 55 put is going to move more than the 5,000 put. That would be obviously a losing trade. You would be offside on the 5,000 put. You'd be in profit on your. You'd be offside on the 5,500 put. You'd be onside on the 5,000. But as I said, the 55 put is going to move a lot more. If only just because of high delta. So guessing is exactly where those prices go to. That's obviously hard to say because you don't know where vol goes to. If it's 10% overnight,
but you know,
that's an alarming vol shock.
This is somebody that's prepared to pay because they're up so much this year, as everybody out there is. Everybody's having an absolute dancer on their ISAs. I want to pay money to protect that profit, right? I don't really care where it trades in the meantime or the vol. I want a big gain if the market goes 10 to 15% lower.
Yeah, so you probably would be having a look, and this kind of takes us back to a value play. Do you want to buy, say, a closer to the money strike and be happy to pay a lot more for it? So say, for example, you might look at the 6,000 put and pay just over 60 ticks.
Okay.
You're paying, what, just under 3 times what you would for the 55 put. But you get a lot more gearing. So depends how much spare profit you've got and how much you're willing to kind of leave on the table.
Right, what about this?
Impossible to say.
If I'm long, right, which I'm not, well, I'm long in my ISA. What about buying a 6,000 put for 62, selling the 5,700, receiving 31. So my net cost is 31 ticks to protect me for 300 points. So I've got a 10-to-1 payoff.
Yeah, that's probably not a bad trade because below 5,700, we've not been down there for quite some time now.
Yeah. But remembering I'm long, I'm also going to sell that 6,700 that you think's trading too rich. So I'm taking another 19 in for that. So all in all, I'm paying 11 ticks to protect my long position. And if we get up at 6,700, I don't care because I've made another 400 points on my long.
Exactly. Yep. And this is where options give you so much flexibility. We could talk for 2 hours just building trades here.
Yeah.
Because you've got all the different expiries, all the different strikes. This is where options are fabulous. And this is where kind of the wider market has really realised exactly how much extra edge trading options gives you.
Definitely.
Yeah.
And they need an Elliot Harris to explain it to them.
I can always do a little course. Happy to.
Mate, thank you so much. That's really.
Let me just make a very quick plug.
Yeah.
I don't know how much time I've got left, but
as much as you
want. In a world first, some of you may have noticed that we launched daily Tesla options during the week. Now, no one else on the planet has ever been brave enough to do such a move. So a 0 DTE option on Tesla.
Oh my goodness me! Talk to how. Oh.
We're not on the Friday because the Friday you've got the weeklies already. So I don't want to open up halves on that and any fun and games between the two contracts. But Monday, Tuesday, Wednesday, Thursday, we have a 0 DTE daily Tesla contract expiring at the cash close. Okay, a world first, completely unique to IG. Now, actually, that's tradable from just after 9 o'clock.
9 a.m.
Trade 9 a.m. Yep.
Oh, mate, so I don't even have to wait for the 2:30 open. This is a bonanza.
Absolutely. Yep.
Wow. So over Tesla numbers, if anybody's got a view, on what Elon's about to do.
So we've got Tesla earnings coming out Wednesday, so the timing's beautiful.
Wow.
Now, obviously, the Tesla earnings coming out after the close.
Okay.
So it won't affect any trading per se on the Wednesday night, but 9 a.m. on Thursday, I'm doing a 0 DTE Tesla option after the earnings. So watch this space.
That's great. I bet that took a bit of work.
And there's further stocks to come. There's further stocks to come in the coming weeks, okay? So we're really sticking our neck above the parapet now.
Yeah, that is to be shot at for sure. Brilliant. So that's that's now Bitcoin that the professional traders can have a look at on the dailies.
So we've got the daily there, we've got the weekly we've just recently launched. Longer terms are being worked on at the moment. I'd expect those to come in the next couple of months. Building the vol service there is obviously slightly more complicated on that one. So I'm in the process of that one as well.
Brilliant. Right. But of course the risk warnings come with the 0 DTEs, don't they, Elliot?
Absolutely. Yep. Always be careful.
Volatility, buying options, of course, you've got that premium. You know exactly what your losses can be, defined loss, but always be especially careful in selling options because we know that's where I came a cropper in April.
Yes, it can. Obviously, you don't know your worst case, so not for everybody.
Yeah, better to put a spread on, like you say, if you're selling. Excellent.
Cap your risk.
Elliot, thanks so much. Have a wonderful weekend. And that's me for the day. Angeline's going to be in a couple of minutes, but have a wonderful weekend. And do not forget, Elliot is going to be listening to the Art of Investing podcast out this evening on Spotify, Apple, Amazon, wherever you normally get your podcast from. Producer Phil is going to put it in that Discord for you. And it will also be on the IG.com YouTube. So not the YouTube we're on at the moment, but the IG.com YouTube. Have a wonderful weekend.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome back to the show, and it is Number of the Week with Chris Beecham. Hey Chris, how are you?
Good morning, I'm okay, thank you. How are you?
I am very good indeed. Were you out late last night enjoying the warm and humid weather?
No, I wasn't, no. Were you?
Nope.
Oh, no, you weren't either, were you?
Nope. I was in bed by 8:30, so I could be bright-eyed and bushy-tailed for this. It's been a really long week. Client lunch yesterday, also lots and lots of meetings for the new products that are coming up. Elliot's just given us a trailer, a tease of the 0DTE Tesla that you can use right now ahead of the Tesla's results, which are coming up quite soon, I believe.
Very exciting product, actually.
Right. Before we get to Number of the Week, Chris, I just want to say a shout out to Grant Tyree out there. Hope you are recovering well, because and hope you're now on a recovery trajectory. He's mentioned on the chat he's just spent a full year and had 4 major operations, and he listens to us every morning because he has now got time to focus on trading. Chris? Oh, here we are.
Yes.
Read out the number of the week, Chris.
It is 94 million.
Ooh. Is this the size of the Beecham pension?
No, no, sadly not, no. It's larger than that, actually.
Outstanding Palantir shares. Trader
niche.
friends, help me out here. Any of you know what 94 million is? Now remember, if you get this right first, you will get a prize from me. I'll put a stamp on it this time, or I'll either post from here on IG to make sure they put that stamp on before they send it off to you.
It's a very recent one. If that gives it any clues.
Oh, it's a very recent one.
Very recent.
For 1 million. Cost savings that Burberry has made in the last 20 years. No, that doesn't sound right either. Very recent.
No, they would do a lot more than that, really.
Right.
Yeah.
Let's see. We've got a quiz up. What was Netflix's year-on-year earnings per share growth in Q2 2025? So they're voting right now. Oh, I guess, is this to do with Netflix, Chris?
Yeah, it is really, yeah. So think of that. What's the key number with Netflix? Or it's supposed to be anyway. I don't think
revenue.
they're so keen on it.
So it can't be that because that was just over 11. I know that figure was 11. So could it be number of subscribers?
Yes. There you go. 94 million people added. New subscribers, that is, of course.
Yeah, I was going to ask you. Yeah. So this is the growth metric that we're talking about, right? The key thing about the results was the fact that we saw its shares, just putting this up for you here, trader friends. Did you see the move earlier, Chris? So it, before the close, yes, it was ticking slightly higher, then it ticked lower in the aftermarket. Now all sessions is down 1.3%, which to me, I think suggests that the disappointment coming from the subscriber growth is what's pulling it down, and the fact that all that joy, all that like excitement over the fact that it was clamping down on its password sharing. Remember that?
Yeah, there is. I mean, it's one of those things, isn't it? Why is Netflix down 1.4% overnight? What's the reason driving this one down? Well, when you're trading at something like 40 times forward earnings and your share price has doubled in a year, or 98% up in a year, what kind of growth are you going to need to get to avoid disappointing people? Not disappointing people, but to avoid the shares just edging back after results. I mean, in the context of a 94% gain, a 98% gain since last July, since 19th of July last year, what's 1.4%? So the headline has to be Netflix shares fall in the wake of earnings because it missed subscriber growth in some small county in the middle of the US or whatever. And yet look at the share price, look at where it's come from. Absolutely strong performance. You could pick it up for $186 a share back in late 2022, not to be a hindsight capital person, but and that was of course the lowest level it had reached in 5 years. So it looked like I should look up the stories from 5 years ago and see from 3 years ago, and see what they say about, has Netflix lost its edge? Is it doomed? All this kind of thing is going to be taken over. Look at it now.
Yeah. It's a one-way street since June 2022. This is the monthly chart that I'm working out for you, trader friends, here. And Netflix also being coined one of those stocks that is pretty much economic resistant. So in the good time, bad times, people still want to watch movies, right? I am not a Netflix subscriber. Are you?
We are now, actually. Yeah, got persuaded into it, but not that I use it. But yeah, we are actually. Yeah.
Yeah. The thing with Netflix is it's really, really, looking very expensive now, and also the fact that I didn't like the fact it's subscribers. Yes, the growth is there, but I think they said, correct me if I'm wrong, that the growth momentum was slowing. But what is also a very interesting thing that might offset all this, Chris, is have you heard of ad suites? Have you heard of Netflix ad suites?
No.
So this is the next generation, and like all of you trader friends and Chris as well, because you have Netflix subscription. I cancelled mine because I thought it was crazy they were going to charge me suddenly extra £4 a month or whatever. The next generation of advertising revenue growth is no longer will you have to be interrupted in your film, but they're actually charging marketeers to have the actual advertising within the film, and they're using AI to do
in
this.
the film, yeah.
Yeah.
Put it in, yeah.
They're putting
That's
it
a good question.
in, and some of them, some examples I've seen is that you get, the floating in of merchandise, you get the floating in of adverts within, for example, televisions, if there's a television or a screen within that movie that you're watching, so it doesn't interrupt your movie. What's also interesting is that, it comes at a time when we've seen this in that Formula One movie, right?
Yes, I think so. You're telling me. You're the expert on driving cars.
So they managed to, I highly recommend you watch it because, in terms of product placement, I think the last time I checked, it was like $40 million already just in the sponsored logos within the film. And for the first time ever, normally you have a book or a storyline that comes before the movie. This time round, it was the Netflixes, the Apples, all the brands coming into a room before conceptualizing the storyline and thinking, how can we work together on this and distribute it together? So almost like a movie ETF with revenue share.
Impressive.
Yeah. So Gavin Acker is saying, like Pepsi in Back to the Future, fantastic, good 80s reference there. I'm a huge Back to the Future fan. And Nike as well, wasn't it, Chris?
In Back to the Future?
Yeah.
Don't ask me, I've not seen it.
So read out the poll. Can you see the poll from there, Chris? So we've got the results in from your poll.
I can't see in front of me, no. Hang
What
on.
was Netflix's year-on-year earnings per share growth in the second quarter? And 32%, we had 47%. We also had 35%. You got your screen up now?
Hang on. No, still not in front of me.
11%
My sharing's
voted
not working.
53%, and 5% voted 61%.
And there you go, 47% the answer. Very good.
Very good indeed. Lots of Netflix trader friends here. Gavin Ackers, yeah, Nike too. Thanks for confirming that. I thought I was imagining it, but clearly the marketing worked. Let's have a look at some of the other poll questions as well. Have we got another one, Producer Phil? Right. Chris, I know you're a very busy man. You have to go within a couple, 1 minute really. What are you doing this weekend?
Oh, you always ask me this. I haven't the faintest idea.
You haven't had your marching orders yet?
No, not yet.
Right, we'll see you online. And trader friends, any questions for Chris Beecham, slam them here on ask@ig.com and I'll put it in front of him. And don't forget to slam the like and subscribe button. We've got Issal coming up next with Week Ahead.
In the last video, we talked about how the S&P 500 has a higher PE ratio than the FTSE 100 because investors expect faster earnings growth. But let's look at what happens when those earnings actually grow and why that makes such a big difference. Here's the S&P 500 in year one. Its PE ratio is 24 times, which means investors are paying 24 times the earnings to buy shares. This tower represents the share price. The height of each block reflects the unit of earnings needed to support that valuation. Now, let's jump forward to year two. The share price hasn't changed. This tower is exactly the same height, but look what's happened to the earnings. Each of these larger blocks represents higher earnings compared with the smaller ones from year one. Because the earnings have grown 50%, what used to be 24 times earnings in year one is now only 16 times earnings in year two. That's a huge improvement in valuation, even though the share prices have stayed the same. This is the power of earnings growth. When companies deliver stronger earnings, the PE ratio naturally comes down, making the stock look cheaper even if the share price hasn't changed. And when investors see that kind of growth, they're more likely to stay invested or even buy more shares. And that's what pushes the PE ratio back up. And that's what makes shares go up or down. Now compare that to the FTSE 100, where earnings grow more slowly. Even if the share price stays the same, the PE ratio doesn't improve as dramatically because the earnings aren't growing as fast. That's why growth is such a critical factor in investing. It's what drives long-term value. So here's the big lesson. Earnings growth doesn't just boost a company's value. It makes the stock more attractive by improving its valuation over time. As an investor, the holy grail is to find companies that can grow their earnings by more and for longer than other investors may already expect. This may even mean avoiding shares that are already very popular, overowned, and potentially overvalued. Because if a stock on a very high PE ratio misses its earnings estimates, then the price can come crashing down.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hello, trader friends. It's here.
2 days in a row.
No, it's great having you back. We've missed you. Everyone on Discord is even asking for a special ISAR psychology.
We've wanted to do a Q&A for a while. We should do that.
We should do that. Producer Phil, let's make that happen.
But today's week ahead, so I think we're trying to focus on what are some of the big things.
Yeah.
You've already got up on your screen, and we can pull it up on the screen for everyone. Some of the kind of major earnings season like dates. I think we are now kind of fully in earnings season. This week coming up is a week that I think is fairly busy, but next week is like the week after that is full on. So next week, what do we have? We have some big tech earnings. You can see on Wednesday, you've got Tesla and Alphabet. Big day for tech earnings. You can also see we've got a crazy number of consumer names. So on Monday, we've got Domino's. On Tuesday, we have Coca-Cola. And then we also have Chipotle on Wednesday. We've got McDonald's as well, and so we've got like a bunch of those consumer names.
Yeah, American Airlines and Southwest.
Yeah, exactly. We've got MasterCard as well. Yeah.
So yeah, it's a great week for tech and consumer.
Yeah, if you look the week ahead, actually, it's even more intense for both. So you've got Visa and UPS, who are normally like the best predictors of kind of transaction volume, but you've also got your kind of Meta, Microsoft, Robinhood, Apple, Reddit, Coinbase. So I think then like fully big tech is on kind of everyone's radar.
Yeah. You know, what we've seen so far is, I don't know whether you're seeing this trend as well, SR, but it seems like if companies meet, then there's disappointment. They almost have to really beat.
We've been in like a mode of like beat and raise, sandbag expectations, then beat and raise, and sandbag expectations. And I think that is quite dangerous actually for the market, just because you don't know where a company might actually miss expectations, and then the difference between that and kind of even just hitting is so big. I think of the names that I'm looking at next week, I think I'm definitely looking at Google and Tesla. I think Google has had a period where actually relative to the Mag 7, it's not been one of the stronger performers over the last maybe 6 to 12 months. More recently, it's had more robust performance. It's facing kind of some headwinds, like its search business is looking like it's a bit more vulnerable with a lot of the AI use cases coming out. But at the same time, Gemini's now kind of back up to speed. You're kind of seeing a much more competitive offer from Google than maybe this time 3 months ago, or at least this time last year when kind of OpenAI felt way ahead. So I think Google's one that I'm looking at. And then obviously Tesla is one that we should definitely be paying attention to, in part because, I mean, if you pull up the Tesla share price,
I'm going to do that now.
You can see like Tesla in particular has had quite a volatile period from the moment that Elon went into the White House and then kind of when he left the White House, and there's been a lot of movement around kind of the robo-taxi launch. And so I think I'm curious to see how is the core business doing, like how are deliveries doing, how are sales looking, but the real messages will probably come in the earnings call where you'll get to hear some of the more longer term strategic pieces. And that's often, if you look at Tesla's share price, it's not really being priced as a car company. So to what extent are they able to deliver on some of the autonomous claims and the robotics claims that are kind of underpinning a lot of its growth?
So I, and this is my humble opinion, trader friends, still looking at potentially a downbeat, or rather shares to fall on the Tesla earnings.
What would be the reason?
So two things I'm watching out for is the technology that you're talking about, so robo-taxi related, and we know there's been disappointment in that. Did you see the video of the...
There've been a couple of videos actually of them swerving.
Yeah, or someone put a video on Twitter where they had the robo-taxi trying to go into a space, but then it didn't realize that actually the car or the vehicle in front was actually reverse parking into the space.
Oh, wow.
So then they had to...
Did they crash, or they just like kind of, it just caused carnage?
It caused carnage, and the person had to kind of like, you know, jump forward. And I think there was someone...
Yeah, there's a handler in the back, right? Yeah.
There's a handler. So someone had to like get involved.
I do think this has not been the most successful robo-taxi launch. And I think everyone will immediately compare them with Waymo, who've been on the roads now for like the best part of a year in several cities, including in San Fran, where they're like everywhere, exactly. And so I think there is a bit of risk that with all the hype that was built, the launch has been a bit disappointing. At the same time, like Elon's an incredible hype man, so I wouldn't be surprised to see kind of a bit of an upbeat reaction, even if the news doesn't feel so positive. So, okay, robo-taxis was one. What was the second?
Second is margin, and thanks, Monkey Man. I just remember Monkey Man sent me that video on the Tesla tech not working quite right. Yeah. The margins are
on the core like cars.
Yes. Yeah. Purely because we've had data.
EV tax credits.
Exactly.
Well,
yeah. EV tax credit, but we had data on that, and also from a lot of their growth markets. Showing that their sales are coming back off, right?
Yeah. Well, I mean, China has been particularly weak because you've got so many competitors. You've probably got BYD like launching in a bunch of their kind of competitor countries in Europe or elsewhere. Yeah. So I wouldn't be surprised. I mean, when I went to Singapore in November of last year, the number of BYDs I saw on the road was crazy.
Yeah, and you're seeing them more and more here, right? Yeah. The cost difference is incredible.
Massive. Well, I mean, China's essentially dumping cars, right? At what cannot be a profitable price.
Yeah, but also the thing is their technology, you know, when they come to ramp up the price, it will be paid for. Because I drove an Xpeng recently, I parked it with my thumb, and the tech was just outstanding. I mean, it didn't go wrong, or at least I didn't see it.
Well, there just hasn't been a refresh of many of the Tesla models in years, right? Yeah. So I think one is expected next year. So I think let's see. But
so that's why I think the margins, Tesla historically, trader friends, if you go back and do research on this, historically when they can't pump up the numbers. Then what they do is they then forego the price increases, and they drop the price to try and get the numbers up, right?
Yeah.
And that you'll see compression in the margins, which is not good for the share price.
And are you worried about the results or the guidance, or a bit of both?
A bit of both. I think it will be more so the guidance. Yeah. So if we see anything that's, robotaxi related tech, not as good as expected, that's a down arrow, trader friends. Yeah. Anything that says, margins are going to be hurt, or any indication.
Do you think they'll talk about the humanoid robots segment, or because I think that's the next kind of hype generator for Tesla, right?
Yeah, and they always have something to kind of.
Yeah, there's always a new thing. Exactly. Yeah.
Yeah, I just think it's a bit too soon. Since the last, class act where they had a human actually in the suit, remember? And I think that will probably come into play in Trump 2.0, maybe year 3, year 4, but it's a bit early right now.
What do you think about Google? Because Google's the other kind of massive tech name.
Yeah, let's just see share price. I think we've had so much bait in. This is the problem with these companies now.
Alphabet, relative to the Mag 7 though, is one of the less frothy. I mean, they've had you can see the recent run has been more positive, but like, of all of the Mag 7 names, I'm kind of the most bullish on either Alphabet or Amazon. But in both cases, like they've not been at the forefront of some of the AI stuff, and I think that's really hurt them.
Yeah, and also don't forget Google, the parent Alphabet, is coming off the back of really strong earnings from Q1, true, right? So it boosted and beat on its top and bottom line. Also boosted its dividend then by 5%.
Yeah, and these companies are spending enormous amounts on capex.
Yeah.
I don't know at what point the market starts to price in the truly mind-blowing amount of capex that's going to now be annualized over the next 10 years.
Yeah, and then they're going to start saying, where's the payback, right? Where's the payback?
Yeah.
But also, Alphabet also issued another $70 billion in stock buybacks. So a lot of
sounding positively bearish.
I mean, a lot of it. I know, right? This is no different for both of us.
Right?
Normally, I'm like, you're the perma bear, and I'm the care bear.
Yeah. But yeah, is there a kind of, how are you thinking about your portfolio? How are you thinking about market conditions? Because this is probably the most bearish I've heard you in a while.
It is actually. I am putting a lot of money sort of to work elsewhere.
Yeah.
Bitcoin, Ethereum have been moving recently.
I know you're big on defense. I think Lockheed's also reporting earnings next week.
Yeah.
So that might be another interesting one for you.
Yeah, and defense is more a longer term play as well. And also I'm looking at more longer term thematic plays whilst I'm waiting on the sidelines, right, to deploy. So I've looked at building a position in the Sprott.
The uranium miners. Is there a reason you chose the uranium miners rather than the physical uranium trust that Sprott runs, where they just track the underlying price of uranium?
Yeah, they tend to follow in the same way.
A bit like gold and gold miners.
Yeah, exactly. And also the fact that I watch the supply.
Yeah.
And it's tight. It's been tight for a while now.
Oh, yeah.
Yeah.
I mean, but that's why I've been quite bullish on uranium itself.
Yeah. The other one.
Honestly just don't know very much about the miners, so it's just hard for me to kind of have a view on them beyond just them being a leveraged play on uranium prices.
Yeah. And I find for some reason them to be, and I speak a lot with Luke Moore about this, because he's going, why is it your spot's going up but my yellow cake isn't? So I'm going to punch up yellow cake for you. This is another one that I'm watching. I don't have a position on this at the moment, so just watching its...
Sorry, just for people who don't know who yellow cake are.
So yellow cake, very interesting. They are involved in the uranium space. And I'm just trying to find out what their recent... They had a recent call, and this is why Luke Moore went into yellow cake. My base case is literally tech cannot get us out. I'm talking about humanity here. Cannot get us out of this climate change problem.
Yeah. I think there's been a bit of a pivot towards more of a kind of abundance mentality, which is like, instead of us trying to trim back carbon emissions, and curb consumption, the path has to be renewables and like nuclear.
Yeah.
to
Even
just
then, it's not
generate-
enough. Yeah.
Yeah, but even I think nuclear is going to be key, right?
Yeah, so
Especially
nuclear
because
is
of
the-
how spiky
Exactly.
renewables are.
It's basically we need a base source of energy.
Yeah.
Right? No matter what. So if the wind doesn't blow,
Yeah.
we have a base.
Like you can only do so much with grid level battery tech.
Yeah.
So I think you can only do some sort of curbing. So I think I'm also bullish nuclear in general.
Yeah.
It's just hard to know how to best express that view.
Yeah,
We
so
actually
this
had
is
a-
different. Yellow Cake, just very quickly, they invest and they hold physical uranium oxide,
Oh, okay, interesting.
right, which is its core asset.
Yeah. So if you look at the Sprott Uranium Trust, the physical uranium trust, it's very similar actually. So I imagine they'll be following a very similar path. That one, yeah, exactly. So this is not the miners, but this literally they literally have physical uranium. In the same way that Sprott has a couple of these kind of physical asset funds, which is super interesting. I think if you're thinking that supply is going to tighten, it should be the case that this is fairly bullish, but you can see recently they've had a bit of a cool down period. I think that's to do with oil prices as well. So there's like a direct kind of substitution effect between different kind of energy prices.
Yeah, so this is the one I'm in. And
This is the miners, right?
Yeah. And this is the ETF. And I just,
It's interesting. The miners have gone up while the underlying uranium prices have gone down, which is interesting.
There is a bit of a lag. I have a, what I call a 3-month traffic light view. So I have an alert for myself so that it nudges me, or like a calendar alert, right? At 3 months, I'll say, you need to re-look at this.
Right.
So it's not
a kind of longer term position.
Yeah, and then if it's still going up, it's still, I'll stay.
Yeah.
Are you doing that thing that Rich does when he's with me? So we talk about like John Mayer saying like, BHP might be looking at
I tick off stuff that we're talking about.
Oh, right, fantastic.
I've ticked off the.
He's there next to me, either buying or coming out of it. So
It's like semi-zoned in, semi-zoned out. No. I actually was just conscious of time. I wonder if we should move on to some of the consumer names.
Yeah, let's
So
do
we
that.
have Coke, McDonald's, Chipotle, and Domino's. Of those, would you like to guess which one I am most passionate about?
I'm going to go for Chipotle because it's been unloved.
That has been
bit,
unloved.
Yeah.
I was going to say...
You're a bit of a contrarian. You have...
I am a bit of a contrarian. I love Domino's, though. I think Domino's is a really excellent value name. It's obviously a Berkshire name, and so...
I was going to say, you're not just biased because Berkshire has it.
I mean, I have a deep love for Berkshire's positions, but I think Domino's is an interesting name. I do think also Chipotle is an interesting name. I think I'm less bullish McDonald's this quarter compared to the other two. You can see, look at that run from Domino's. It's been pretty brutal.
Yeah, look at that.
Yeah, wow, look at that. That's a pretty brutal trend.
Since January 2022, and then it regained some composure.
Yeah.
And
I think that's actually when, literally when Warren Buffett upped their shares of Domino's. But now, if you look, since, 2023? It's just been on a kind of brutal ramp downwards.
Yeah, but from memory, didn't Buffett add sort of just before Christmas?
Yeah, a little bit, yeah.
I seem to recall someone on the chat saying, can't believe Angela's never had Domino's. Someone go and get her one right now. And
we should get you Domino's. If Domino's massively beats, we should get you some Domino's.
Rich did bring one in.
Oh, really? And what was your view? Okay, I guess, what were you comparing it with?
I was comparing it to pizza in Milan, or like I didn't know what to say.
No, you can't compare. You can't compare like artisanal pizza with like Domino's.
Okay,
Domino's is its own genre of pizza.
Pizza Hut then, Pizza Hut. But yeah, the Domino's, and Rich didn't tell me that it had been cold for about 5 hours because he was filming it to show
cold Domino's, in my view, is actually better.
Earnings per slice.
We have an assistant who's come in to hand in.
Handsome assistant.
Rich, just give me a thumbs up or a thumbs down. Are you bullish Domino's ahead of their earnings next week?
Does that what they look like?
Rich is, for those who couldn't hear, Rich rubbed his belly, which I think is a bullish indicator.
Does that mean you're also, as you're a Buffett fan? So
I am a bit bullish.
My memory tends to get better if I have coffee. Thanks, Rich. Buffett also, as he added dominoes, he added a pool side stock.
Yeah, that's true. Yeah.
And every analyst and everyone who loves Buffett.
I'm not super bullish pools.
Like that was it's like a pool servicing company.
Yeah.
And so the company, gets a call out, and then
it just feels like that's such discretionary spend. Right? Like I was interested that he made that decision. I imagine it's a really well-run company, but. No.
And there were jokes that he created some sort of, or found some ratio that people who had pools ordered a lot of dominoes. Yeah. But yeah, Stuart Wallace, never again. I think that was my first and last, unless there is some pizza at Domino's that I have not tasted before, but it was rank. It was actually really rank. Kate Murphy.
So we got some comments. So Vodafone Q1 on Thursday. Yes, Derek. That is in fact a big name for the show, in particular with Rich, a big lover of Vodafone. Vodafone's obviously been through a bit of a turbulent period recently with leadership changes.
But look, it's ticking up now.
Yeah, well, the turnaround stuff seems to be working. I mean, the share buyback program has been enormous. So I'm kind of not surprised to see it tick up.
Yeah.
But look, it looks pretty healthy. It's a pretty good run. Is that, are you drawing a line? Yeah.
Yeah. So I was drawing you see the lines that were kind of going down.
Kind of a wedge, right?
It is a bit of a wedge, and it broke out. And Rich had been talking about, or hoping to talk up Vodafone since January, which is where my line started.
I mean, to be fair, it's had a really good run.
Yeah, and so then I said to Rich, I'm like, looking at the charts, because fundamentals and charts and technicals go together, right? They should be friends. And I said to Rich, as a trader friend, I said, the charts don't seem to align with your fundamental stars just yet.
But now they are starting to.
They are starting to. So Rich, at that point,
I don't know at what point Rich doubled down.
He was 5 months out.
Yeah. That's not bad, honestly. That is not bad timing-wise. Valuation stuff tend to be quite lagging. It's hard to know. 5 months is, in the grander scheme of things, not that much time.
Yeah, much better than my Diageo.
Yeah.
Just only now started to pick up. Oh my God, it brings me pain.
Okay, cool. We have Vodafone, and then back in the chat, I think there were some painful comments around Domino's. Yeah. James Bennett.
He's still holding Rolls Royce. We checked on that for you. Thank God you're safe, Kate, because Kate Murphy disappeared for a few days. You were like, we thought you were here. Have you gone back?
She said she wants shares in the place you get coffee from.
Oh.
Where have you got?
Crosstown.
Crosstown. Interesting. Yeah. The donut place.
Yeah, the donuts don't do it. It's just too much sugar. Don't tell Rich, but the Roslyn coffee's better.
I prefer the Roslyn coffee. We all have quite strong preferences in the office. Yeah.
We do. Marcus Kane saying, anyone remember Carphone Warehouse? Still traumatized. Yeah. I think we should have all known that, the longer the name,
the less bullish.
The less bullish you should be because it tells you that management cannot agree, or there's a lot of tussling, right?
Yeah. Well, Stuart also just asked about Jaguar. Jaguar had their lowest deliveries ever because they swapped from OEM cars to EVs, and I think it led to something funny, like the month-on-month deliveries were down 97%. But I think, to be absolutely fair, that was kind of priced in. We knew there had to be a date at which they swapped across. Jaguar also famously did the big relaunch of their brand.
Oh yes, the weird, funky colours.
I mean, at least we were talking about them.
We were talking about them, but was that the main ploy? Because,
I don't know. I think it was a big swing. I guess we'll see how it pans out. But I think now that they've switched to EVs, I guess we'll see how appealing it is. To a new audience, an audience who kind of haven't historically maybe bought Jaguars.
Yeah. Let's talk about the indices really quickly because, we had Joachim who came in earlier. He's still sticking to his 10 to 15% correction.
Oh, yeah? That's his call? Over what time horizon?
In the next, I think, 3 to 4 months.
Okay. That seems not plausible. I think a 10 to 15% correction, I think people always kind of react quite strongly to double-digit moves, but actually over a 3 to 4 month time horizon, it's very reasonable. It's kind of, I wouldn't even consider that to be kind of a major correction. I guess it would be
Plus it's August, right?
Yeah, exactly. Volatility's bad. I think that's not bear market territory. So, I mean, I guess let's see. I am also kind of the view that a lot of these valuations are quite frothy at the moment. I think there's risk with tariffs, there's risk with geopolitics. So I think I don't think that's a bad call at all.
Yeah, and then, but he did also reiterate that after that correction, it's risk back on again.
Oh, really?
That's his view.
Oh, interesting. That's an interesting view. What does he think will catalyze the correction then?
Well, he said, you know, either some sort of, you know, left field comment by Trump or maybe
Firing Jerome Powell.
legally he cannot do that.
Well, he can for cause. That's why there's all this stuff about how much the Fed has spent on their building.
Ah, yes,
because
the
I think
refurbishment.
Yeah, exactly. That's the only kind of plausible case they have to fire Powell. But I think he floated it as a topic this week. Markets didn't react super well, and so then he kind of backed off. So I guess we'll see. But I don't think he will be firing Powell, at least in the next week or so.
Yeah. So trader friends, do you know what I am excited for next week in terms of the consumer names?
I don't know which one.
I am getting lots and lots of messages from everyone in the States saying they're all traveling, they're going to have a great time.
Oh, yeah.
They're going to see my other relatives. I've got loads on the East Coast, West Coast, not so much in the middle, so I'll have to crisscross.
Yeah.
And so the airlines, I think United and Southwest, you know, they've both come out with stronger projections already.
Oh, so you're bullish on the airline?
I think they're going to have a good run, and also, you know, oil prices being where they are, and we've had them stuck there for quite some time.
I mean, as we close the show, can we do one final check?
Yeah.
Can we have a look at Nike versus Lululemon?
Continually.
Every week, we're just going to check in. For those at home who, for those who don't remember, 3 weeks ago, Angie and I made a small bet around who would have the better 12-month performance.
I think at the moment.
We're now almost a month in.
New pair of trainers.
Oh, look, we almost timed the bottom to like the perfect tick.
Perfection. Did you have inside knowledge on that?
I did not.
Let's have a look at the daily. There we are. Yeah, I think you're still.
I think I'm in
winning.
good shape.
Yeah,
I think I am in good shape.
Yeah, if we were running a race, you'd be way ahead.
I think I started with a bit of a head start though, because Lulu had quite a good run.
Yeah.
And look at that.
Oh, Lulu. Oh, no, but it's okay, people. I am counting on you, 31-year-old women, men with a lot of extra income. All you, what is it? The dink yabs.
Dinkwads.
Dinkwads.
Dual income, no kid with a dog.
Come on, help Ange to a new Lululemon wind cheater by 12 months, well, less than 12 months' time. Right, thanks all Marco Polo, away from the numbers, hey Neil and Stuart Wallace, have a great weekend, Jesse 14 as well. This is what's coming up Monday. Issa, take us through it.
Nice. So we start with overnight action with Rich and Chris Beecham. Then we've got the opening bell, then fast market. So it's all a bit of a rapid fire on Monday morning. And then we get to go live from the trading desk where you'll be with Martin.
Yeah, and then we have Rich McDonald back with me to go through my favorite bit of every single day, the all sessions opening bell. And we'll have Chris Beecham in place of Axel Rudolph.
Oh, Chris is doing trade of the week. I'm curious what Chris's trade will be.
Yeah. Axel, meanwhile, is on a 3-week holiday.
Beautiful.
Nice, right? Phil, are we calling him in? Are we calling him? And we have Rich McDonald back with Garth McKenzie on the latest series that we've just started, coined Expert Edge, where we get experts on board when you tell us what you'd like to talk about and what you're investing in. Right, have a great weekend, guys.
Have a great weekend.
See you on Discord.